Hey folks, Dan Frio here, the rate update. Today is March 19th, 2021. What happened with mortgage rates? What happens with the fear of higher inflation? What's happening with Treasury yields? Don't go away, we're going to find out here in a minute. My apologies, guys, I didn't shave today. So I woke up a little late, a little bit lazy, starting to watch basketball already. So what's going on with the stock market and mortgage rates and interest rates? Well, the big dilemma right now is what's going on with the 10-year Treasury. And I know you guys are going to say, Dan, you keep saying the 10-year Treasury has no influence or direct correlation with mortgage rates. It really doesn't, but it's a piece of the investment stratosphere that people can put their money in. So if the 10-year Treasury yield is so high, it has people selling mortgage-backed securities, selling stock and other investments, putting it into the 10-year Treasury or the 20-year Treasury or any other treasuries that are out there. So that's what's happening, and that's why the markets and me right now are focusing on where that yield is, because again, it doesn't affect mortgage rates directly; it indirectly does it. So let's look at it. Basically, here's rate fears are getting the blame for the recent stock weakness. There are other fears involved, like there's a big dispute with the president and Russia right now. There's also disputes with North Korea again. We have issues at the border again. There's a whole slew of things in the background that are starting to kind of add up. We'll put it that way. So let's get on to the major news why you're here. But what I want to talk about in this segment, just briefly, is forbearances. And I keep saying, if you're in a forbearance, please consult us to get out of that. There are 1.2 million. There are 1.2 million mortgages right now that are due to expire on their forbearance agreement at the end of March. So are you prepared? Are you ready? Do you know what to do? So let's dive down that for a second, and then we'll talk about rates. Okay, so I'm posting a detailed video next week, and it is basically the whole video is about in forbearance, what it is, how it works, and your options to get out of that. But right now, if and when you're getting these letters, don't freak out. Please call us. This is the best way to do it. There is no cookie cutter plan to say, okay, here's what you do, and here's your best way to take, get yourself out of that program. I'll say it that way. So let me walk you down. Basically, a forbearance, it was introduced last March. They came in and said, you can postpone. You can't skip. You can postpone or kick mortgage payments down the road. Okay. Many of the programs lasted for a year. Okay. So March of last year, now coming due March of this year, the end of March. So what happens at this point? You're going to have made basically four primary options. We'll go that route. One is to take that balance and throw it at the end of your loan. Don't worry about it. It's interest free and move on. Okay. That's the best way if your rate is low. Okay. Second way, what they'll do is they'll take the balance that you owe, the deferred interest, principals, all the other stuff, divide it by 12, add that to your current mortgage payment. So then your mortgage payment goes up quite a bit, but after 12 months, you'll be back to square one. Okay, that's that. Number 3 is stroke a check and pay yourself current. Most people probably can't do that. Option 4, and this is where I come into play, and this is why I need you guys to call me, is based on your program that you're in. If it's FHA, VA, USDA, or conventional loan, that will determine how, your best option to get out of the forbearance. Okay, the easiest program to get through that is if you're in a VA loan currently. So if you're in a VA loan currently, we can do what they call the VA, I'll call it the streamline, where we can refinance your loan, take all the deficiency balances, interest, any fees and so forth, lump it into one, refinance you on a 30-year term and get you a new start. That's the cleanest way to do it. However, we want to make sure it makes sense. Okay, so here's the backdrop of that. If your rate is 2, then I want you to kick the can down the street. Take the balance, put it at the end of the loan, and don't worry about it. Just live life and move on. If your rate is 4 or higher, call me. Because with the VA, we can get you through as long as we can show that you are current at the time that you went into the foreclosure and your credit scores are currently over 600. I can get you into the VA streamlined program and take care of that. Okay. If you're in an FHA program, we can do the same thing. But the VA program doesn't require an appraisal, nor does it require that we get any of your income. Okay. However, on an FHA loan, we don't need an appraisal as well, but we need to verify your income. So you're going to have to send me pay stubs, W-2s, and so forth. It's still a simple program. Okay, so FHA is I need to verify your income. VA, I don't really need much of anything. Now, when we get to USDA and conventional loans, we need you to complete your forbearance agreement, make 3 consecutive payments on time. So you come out of your forbearance at the end of March. You need to make April, May, and June's payments. Do everything and anything you possibly can to make those payments. They can't be paid at once. They have to be made in each one of those months. Then we can refinance you. Okay, we can throw in all the principal balance that you have, plus the deferred interest and everything else into one loan and refinance that loan into a new 30-year term, give you a fresh start there. Then you don't have to worry about paying off your loan and then having all this deficiency balance left over and so forth. Again, if your rate is in the 2s, just kick the can. Please just kick the can, okay? Unless you have a lot of equity built up in your home and you're back to work and things are okay, but you ran up a ton of credit. You started living on credit cards and everything else, and you want to combine all that in to one payment, then we can talk about that too, because I have a lot of clients that are calling in. They're like, Dan, we're back on our feet again, thank God. But we ran up 3 credit cards. They're maxed out, but we have equity in our house, so we want to lump everything together, have one easy payment, pay it on a 30-year term, have a comfortable, affordable payment, and move on. Just move on with our lives. Everything that happened in the past is in the past. So again, there's a whole bunch of options for you, but if you're one of the 1.2 million people in forbearance right now that's coming due at the end of March, please call us. I'm going to give you all that information at the end. So let's get on to what the MBS market is doing today. So we skim over here. I don't have the rates yet today, but I wanted to get this out as quick as I can. I'm actually heading out to go see some basketball. But the MBS market is still plummeting. The good news is the 10-year Treasury is starting to stabilize. So if we can stabilize here, which I think a lot of the news, a lot of the analysts, stock analysts, economists, and so forth, they're saying this might just be about where we should be settling right now. So if that's the case, and mortgages can start to find a bottom here, I'm still saying we should get up to this range here. I think this is overreaction. So as soon as you start seeing this stabilize, more people getting in and starting to buy mortgage-backed securities again, as well as the Fed, I think we're going to stabilize here. Are we going to get all the way back up to here? I doubt it. I doubt it. So let me explain this, because people be like, well, Dan, if this is what's going on with mortgage rates, that's fantastic. It's not. This is what's going on with the price of a mortgage-backed security. Mortgage-backed security is a bond that trades on Wall Street that is the biggest factor or component of your mortgage rate, okay? It's that plus what we call loan level price adjustments. So when the price goes down, rates go up. That's how it works. When the price goes up, rates come down. So this move, you can see from back in the middle of February, all the way through basically now, we've had deterioration in the market. But if you watch the 10-year Treasury during that time, it had a reverse effect of this. It kept skyrocketing in yield. Okay, so that's what's going on right now. The assumption is this is going to stabilize. I think all the shock and awe is out of the system. We did have probably at least 0.3 to 0.4 increase in rates since this time. But still, historical levels, we're still really, really, really low. We at the historic lows? No. Will we be there again? Probably not in my lifetime, or at least I hope not. Okay? So that's the trend of what's going on right now. It's not a good trend, but let's look at the intraday to figure out where we are there. So when we go to that, we can see the market plummeted, and then we had a bunch of buyers who brought the market back up, then it was selling off, and now we're basically right here at the day. So we're off the lows, but not by much. But I think again, my everything that I'm researching is basically telling me I think we've hit a short-term bottom here. I guess is that the way to say it. I think the U.S. Treasuries are going to stabilize right around this range, and that should start moving or at least stabilizing the mortgage-backed securities market, and we should stabilize at this point and even pick up a little bit more, meaning our rates should start to ease just a little bit. A ton? No. A little bit? Yes. The good thing is there's really no economic news today. Bank of Japan came out with information, but jobless claims and everything yesterday weren't good news. Okay? So basically on the day, we had a pullback, which raised rates, but I think we're finally there at the bottom. There's no economic news today, guys, that I can really go over to give you, patterns and so forth. But let's go back to see where we were. Let's go 2 years back. Look at this. Look at this fiasco. So if you look at this over a 2-year range, we were all the way down here in November of 2019. We still had a huge uptick. So if you took out a mortgage in 2019, your rate, I can almost assure you, your rate is 1% higher than it is today. That's where the forbearance stuff comes in. If you're in a forbearance, you've probably been in that loan for a year, 2, or more. So that your rate is probably in the 4s, if not higher, and I need you to call me. So what's the best way to reach out to us for consultation? And again, today I'm just focusing on forbearance. If you're the 1.2 million households that in a forbearance, please call us. What I ask you to do is, and I'll show you that information, how to get a hold of us now, but all I'm asking you to do right now is please give me a thumbs up. I'm trying to hit 15,000 subscribers by the end of next month. We're adding about 100 a day, so please help me keep that up. So give me a thumbs up, subscribe down below, and click the bell. Every time I post a video, you get an alert. So how is the best way for you guys to reach out to us? Well, that information I'll give you in a second. I know I just said that briefly, but if you're buying a house, building a house, refinancing, or in forbearance, and you're in the process now, okay, you're working with a lender, please send me the loan estimate that they gave you. The loan estimate is going to give me the loan amount, your rate, your term, if your rate is locked in or not, and all of the fees. Guys, there's still people sending me their loan estimates every day and they're wowed about the rate. But as soon as I go over the rate and fees, they're like, oh, I didn't realize that. I know you didn't realize that. That's why I'm doing this video to bring it to your attention. Please watch the fees that you're paying. I can get you a 2% rate if you want to pay a ton of money. I wouldn't do that because, at what point is it going to break even for you? You refinance and you pay all these fees, you have to find out how long it's going to take you to recoup those fees and make sure it's a time frame that actually fits your agenda. You might say, Dan, I'm going to be in the house 5 years. Well, we don't want your break-even point to be 6 years. Or you might be like, Dan, I'm going to be here forever. I just want the lowest payment I can. And then, okay, let's say the break-even point on that is 5 or 6 years, but after that point, you're saving $200-300 a month. That's when we maybe look at paying, a decent amount of fees. But I'm not a proponent of paying fees. Okay, so how do you get a hold of us? Great question. I need you to go to therateupdate.com. Scroll down below. There's our 800 number, 844-775-LOAN. It's 844-775-5626. Or schedule an appointment. You can go right here, schedule a 15, 30, or 60-minute consultation. We'll do it either via Zoom or give you a call. Or you can go up through here and hit the Apply Now button, get a free quote. Or if you're like, I'm looking to buy a house, but I'm uncertain of a lot of stuff, do this little questionnaire thing. It'll tell you, what programs you qualify, how, what, where, and when. It'll also guide me in the direction to put you in the best program possible. That is for purchasing. This is for refinancing. So that is it today, guys. Hopefully this was short and sweet, but if you're in forbearance, you know somebody who is coworker, friend, neighbor, relative, aunt, uncle, kids, whatever, please share this video with them. At least bring to their forefront of what their options can or aren't going to be if they're in forbearance. Don't lose any night's sleep. Please seek consultation. I can't help you unless you help yourself. So I need you to call. That's it, guys. Take care. Have a great weekend, and I'll see you Monday. Bye-bye.